Have you ever wondered how a company's worth is determined? In the grand scheme of financial affairs, the stock market plays a pivotal role. This complex system, a hub of economic activity, is where shares of publicly traded companies are bought, sold, and traded. It's here where the perceived value of a company is reflected in the price of its shares. The fluctuations in these prices, driven by countless transactions, ultimately determine a company's market value. So the stock market is more than just a place for buying and selling shares, it's a measure of a company's value. To understand the stock market, we must travel back in time to its birth. Picture 17th century Netherlands, where the first stock exchange was born. The Dutch East India Company, seeking capital for its voyages, sold shares to the public. This innovative idea sparked a financial revolution that would shape the world for centuries to come. Fast forward to the Industrial Revolution in the 18th and 19th centuries. As industry boomed, stocks became the preferred way for companies to raise funds. The stock market evolved, becoming a vital part of the economy, with trading taking place in bustling exchanges like the New York Stock Exchange. Then came the Great Depression in the 1930s. The stock market crash of 1929 sent shockwaves around the world, leading to a massive economic downturn. This period in history taught us valuable lessons about the stock market's volatility and the importance of regulatory oversight. But the story doesn't end there. The late 20th and early 21st centuries saw technological advancements that have transformed the trading process. Gone are the days of floor traders shouting orders. Today, trading happens at the speed of light, on digital platforms that connect buyers and sellers across the globe. From a humble gathering of traders under a buttonwood tree to a complex digital trading platform, the stock market has come a long way. But one thing remains the same: its ability to connect businesses seeking capital with investors looking to grow their wealth. And that, my friends, is the power of the stock market. At the core of the stock market's operation lies a fundamental economic principle: the law of demand and supply. This principle is the invisible hand that steers the stock market's course. When investors have a high demand for a particular stock, the price of that stock increases. This is because the higher demand indicates that the company behind the stock is doing well, and investors want to capitalize on this upward trend. Conversely, if there's a surplus supply of a stock with not enough demand, the price of that stock decreases. This typically happens when a company is underperforming, causing investors to sell their shares and increase the supply in the market. These fluctuations in demand and supply give rise to the stock market's ever-changing prices. They reflect the collective sentiment of investors around the world, acting as a barometer of a company's financial health. The constant interaction of demand and supply creates the dynamic and sometimes unpredictable nature of the stock market. The stock market is not just a money-making machine for investors, it's a lifeline for businesses. Businesses and the stock market share a symbiotic relationship. Businesses turn to the stock market to raise capital. They do this by selling a portion of the company, or shares, to the public. This process, known as an initial public offering or IPO, provides businesses with the funds they need to grow and expand. Investors play a crucial role in this process. They buy these shares, betting on the company's future success. If the company does well, the value of the shares increases, and investors make a profit. However, this doesn't come without risks. If the company underperforms, the value of shares decreases, leading to financial losses for both the business and investors. But the potential rewards often outweigh the risks. Raising capital through the stock market enables businesses to innovate, create jobs, and contribute to the economy. The stock market, despite its risks, offers businesses an opportunity to grow and flourish. The stock market, a bustling world of numbers and graphs, plays an integral role in our economy. We've journeyed through its historical origins, witnessing its evolution from a simple marketplace to a complex web of transactions that span the globe. We've glimpsed the dance of demand and supply, a fundamental law that breathes life into this financial ecosystem, dictating the rhythm of the market's ebb and flow. We've also explored how businesses are intertwined with the stock market. They tap into its power, leveraging it to raise capital, fueling their growth and expansion. Yet they're also at its mercy, their fortunes tied to the capricious swings of market sentiment. In essence, the stock market isn't just a statistical wonderland, it's a dynamic narrative, a tale of collective human endeavor, of dreams nurtured and risks taken. So the next time you see a stock market graph, remember, it's not just numbers, it's a story of businesses, economies, and opportunities.